Hey everyone, and welcome back to another Business Basics Hub Explainer. Today we're taking on a topic that causes a lot of headaches for beginner business owners, and that's demystifying the professional LLC and the professional corporation. If you're a licensed professional, we're talking doctors, accountants, therapists, architects, you name it, figuring out how to legally set up your practice can feel, well, totally overwhelming. You're probably staring at this giant mountain of confusing legal terms, just wondering which path is actually the right one for you. We'll take a deep breath. Today, we're going to break this whole thing down into plain, simple English so you can make the absolute best choice for your future. I am super thrilled to guide you through this lesson today. We're bringing you clear, no-fluff business guidance directly from our hub straight to your screen. My main goal here is to empower you with the exact building blocks you need to get started. Because let's be real, we want you spending way less time stressing over state paperwork and a lot more time actually serving your clients and growing your amazing practice. Quick thing before we really jump in. You know the drill. Please remember this explainer is strictly for general educational purposes. It's not formal legal, tax, or financial advice. We absolutely want you to play it safe, so please consider chatting with a qualified professional to get guidance that's tailored to your unique business situation. All right, here is our roadmap for today to get your practice set up correctly. We're going to cover the basics of PLLCs versus PCs, why your entity choice matters, compare the pros and cons, walk through a 10-step formation guide, and finally, look at some big beginner mistakes that you definitely need to avoid. Okay, part 1, the basics, PLLC versus PC. Let's start by getting our definitions straight. It's really important to understand that these structures are purpose-built strictly for people with state licenses. So a PLLC is basically just the professional version of a standard LLC. This means only people with active state licenses, like a doctor or a therapist, can actually own it. Think of it kind of like an exclusive club. If you want to open a physical therapy practice as a PLLC, every single owner of that business must be a licensed physical therapist. You can't just have some random everyday investor buy a piece of it. It's a great balance, right? It gives you business protection while making absolutely sure your state's licensing board still oversees the practice. Then, on the flip side, we have the PC. This is the corporate equivalent. It's also built specifically for licensed pros, but it follows much stricter corporate rules with boards and shareholders. Instead of calling the owners members, they're officially called shareholders. It's definitely more formal. You literally have to elect a board of directors, appoint corporate officers, like a president and a treasurer, and you have to hold official annual meetings. But just like the PLLC, ownership is strictly limited to licensed professionals in your specific field. Moving right along to part 2, why your entity choice actually matters. Now, I know what you might be wondering. Why can't I just operate as a sole proprietor and skip all this extra paperwork? Well, the crucial point here is understanding the absolutely terrifying problem of personal liability and how these specific entities act as your financial shield. Because when you run a business, things can and sometimes do go wrong. And if they do, you want to make absolutely sure your personal life is totally separated from your business life. Both of these structures essentially build a massive legal wall around you. That way, if your practice suddenly can't pay its rent, or say your business partner makes a critical professional error, your personal savings and your home remain completely safe. For instance, if your business signs a lease for an office space and later on just can't afford it, the landlord can only go after the business's money. They can't touch your personal bank account. Plus, if you're in a group practice and your business partner gets sued for malpractice, these entities generally protect you from paying for their mistake out of your own pocket. And let me tell you, that is a huge relief. All right, part 3, pros and cons compared. Let's put these two in a head-to-head showdown. The single biggest difference between the two really boils down to taxes. The PLLC avoids the heavy double taxation that a default PC is stuck with. Here's how it works. With a PLLC, the business itself pays 0 federal income tax. The profits simply pass through directly to your personal tax return. Easy, right? But with a default PC, the corporation pays a flat 21% tax on its profits right off the bat. And then, when you take that money out to pay yourself a dividend, boom, you get taxed on it a second time on your personal return. That double taxation right there is exactly why so many beginners lean toward the PLLC. Now, while the PLLC is definitely simpler and easier to maintain, state law is actually what dictates your choice at the end of the day. For example, California and Georgia flat out prohibit PLLCs from most professions. Yeah, no joke. You might absolutely love the sound of a simple PLLC, but your state gets the final vote. If you live in California, you are required to use a professional corporation or a similar approved structure. You literally cannot form a PLLC there. So checking your state-specific rules has to be your ultimate deciding factor. Which brings us to part 4, our 10-step formation guide. If you're feeling ready to actually build your entity, do not let the process intimidate you. We've got this. The first half of the process is really all about getting your state and board approvals. Step 1 is checking what your specific state actually allows, like we just talked about. Step 2, pick a compliant name. Now, step 3 is a massive one that beginners always miss. You have to get your professional licensing board's approval before doing anything else. Step 4 is filing your official formation documents with the state. And step 5 is drafting your internal rulebook. So that's your operating agreement for a PLLC or corporate bylaws for a PC. Okay, to cross the finish line, step 6 is electing your management board, assuming you went the PC route. Step 7 is grabbing your free EIN tax ID from the IRS. Step 8 is absolutely crucial. Open a dedicated business bank account to strictly separate your money. Step 9 is securing your professional liability insurance. And finally, step 10 is ongoing compliance, stuff like paying your annual fees and holding those required meetings. And finally, part 5, big beginner mistakes avoided. Forming the entity is honestly only half the battle. Now we have to make sure you don't accidentally destroy your own liability protection. I want you to think of your business protection like a balloon. If you treat your business like a personal piggy bank, a judge will pop your protection entirely. But if you act like a real business, keeping your money totally separate and signing your contracts properly, your balloon stays strong. If you start paying for your personal groceries out of the business account, well, suddenly you are personally on the hook again. Now listen closely to this one. Neither of these entities protects you from your very own malpractice. That is exactly why professional liability insurance is absolutely non-negotiable. This is probably the single biggest misconception out there. If you personally make a professional error, like misdiagnosing a patient or making a major accounting mistake, you can absolutely still be sued personally. The business structure is there to protect you from general business debts and your partner's mistakes, but for your own professional mistakes, you critically need your own malpractice insurance. Just as a quick reminder to wrap us up, laws vary wildly from state to state. So please make sure you consult a qualified local professional to finalize your specific setup. Whether you're leaning toward the easy simplicity of the PLLC or the formal, structured vibe of a PC, getting expert advice that's tailored to your state and your specific profession is seriously the smartest investment you can make right now. Well, if you found this explainer helpful, please go ahead and subscribe, turn on those notifications so you know exactly when our new explainers drop, and definitely like and share this with someone who could use a little business clarity today. We really love making these complex concepts easy for you to grasp. So I'm going to leave you with this final thought. Have you checked your specific state's licensing board website yet to see which entity you are legally required to use? Don't wait until it's too late. Go look it up today, and I'll see you all in our next explainer.